As always, wonderful, beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is a super Saturday. Absolutely, it is. It is 9/21, 2024. All right. And this is YT on YT, which is yours truly on YouTube. Absolutely. Absolutely. And we are on gold. We are on gold on the M5 time frame. Same thing as the 5 minute time frame, which means each of these candlesticks take what? 5 minutes to print, and then the next 5 minutes it takes the next candlestick to print. That's what happens. So what you see on the screen is that I on Friday began an account with $170. So that's why I have this 3% daily growth sitting up here. Excuse me. So I began to count $170. All right. As you can see right here, I'm $70 on 9/20. And it was based off of 3% compound daily growth. Okay, based off of trading days, 252 trading days. And so I was able to take not one, but two or three orders from this area. This is just the lowest order that I was able to take. And I took a couple more orders above that, right above this entry. And all of them had the same stop loss and the same take profit, which is right here. Okay, because this is the break above this high. Now we should expect and anticipate some type of distribution coming in this market. Okay, because the market did break above this high to create a new one, right? So when you understand how a market prints, what I mean by that, when you understand how a market prints, is not I'm not talking about market structure. What I mean by when you understand how a market prints, you understand where the bulls can appear and where the bears can appear. Okay, you understand that, and because you understand mentally how market prints and when the bears are going to be able to show up and when they're supposed to show up, and when the bulls are able to show up and when they're supposed to show up. Okay, that's what I mean behind that. And this was a dope trade. 1 to 10, be able to end the week on a high note. Okay, we're gonna build upon that, and I'm looking towards maybe eclipsing. Um, Maybe somewhere between 10 and 20% growth next week. That's just a personal goal for mine. I'm just anticipating. I'm not going to force it, because I'm just anticipating 10 to 20% growth based off of well disciplined taking trades. All right. So some people don't understand what a divergence and a change of character is. A lot of people don't understand that what a divergence and change of character is. That's actually the actual market structure of the pivots in the market. The actual pivots in the market. So I'm able to spot it now without using the RSI, which is called the relative strength index, which is a default indicator, which is sitting right here. I did not modify the settings. All these settings are defaulted. As soon as you log in the trading view, this is the default indicator. But I don't need to utilize this indicator now. I've grown and graduated from it. I'll take the training wheels off to be able to spot a divergence with the naked eye, because I've developed that trader's eye because I've been trading for so long. Um, I've been trading for 5 years now. This year, July 17th, made 5 years. So gold did 1 to 10. Okay, and I'm going to absolutely explain why I was able to do a buy market execution from this area. And if you think I'm capping, I threw it out in my signals community, the signals community that I run. So I threw it out in that. So let's see. Bear with me. Let me see if I'm able to share that. Let's see. I'm able to share my Telegram. Let me see. Go back to the screen. Telegram. I know it's probably not showing. Attempt to show all of you that I threw it out in the chat. Oh, here we go. Window. Okay, let me see. Okay, here's gold. Okay, let me share. Let's see. Set the window. I'll see what's up right here. Nah, that's not it. But I absolutely did throw it out in Telegram. I'm attempting to show all of you how I'm able to share it. Okay, so we're gonna go with like this and something like this. So here's the deal. Right here is the trade at 8:54 a.m. I sat here and threw it out, edited it, and you can see the screenshot at 8:54 a.m. Look at the screenshot right here off my cell phone. Right, 8:54 a.m. You cannot modify this. Same thing, 5-minute OB. Right, the same stuff. Gold, 1-minute time frame. Called it out. Buy market execution. Right. Here's the result. Here's the result. At 11:13, I'm screenshotting again, and I'm showing the result. Okay. And so you still think I'm capping, all right? You still think I'm capping, right? Let me show you the actual trade in my broker account. Let's see. Here we go. Sway charts. All right. So now this says live account right here. Ain't no fluff. Live account. Live USD account. All right. So I'm able to withdraw from this account. Okay. So right here is going to be my trading dashboard or trading journal. Trading journal. Let's go back to last week. And let me show you the trade that was taken. Right here. You can see, you see where it says when the execution happened at 8:34, right? It said 8:34 on the screenshot of my cell phone, right? I did a buy position, open a buy position with a 0.04 lot size, right? Okay, we finished it. Price closed, right? With that 0.04 at what, $2,620.22, right? And that's the price. That's what my TP was. This particular trade ended with $60.80 total. Okay, here's another one right here. 8:45 execution. Buy, same thing, 0.04. It ended at what? The $2,620.19. Same thing. Same roughly TP, just 3 cents less. $61. Then same thing, 8:46 a.m. Another execution. 0.02 lot size. This one ended at $2,620.22. same TP, $32.46. All of these three trades came within the same area, but this is the one right here, the 2,600 and let's see, which one was the lower price? This one was the lower price, the $2,603.09 was the lowest execution. Okay, so in this trading broker is Sway. I will have in the description, the links below. In the description below of this video, you'll see the links to the broker, the leading U.S. regulated broker in the world that's been buying out. I think they have bought out 5 different prop firm companies already. To be honest with you, I think the most recent one is Karma Prop Traders. They buying them out. And so, yeah, this is my live trading account that started at 170 and now it's at $305.10. I'm looking to build upon that. So yeah. Any questions, pals, or concerns? Any questions, pals, or concerns before we get into the actual trading? What's up with it? Kawanda Mitchell, what's up with it? Okay, about to actually get into the sauce. About to actually get into the trade. As to what up, Aki? What's up with it? What's up with Aki? About to actually get into the trade that the one that we ended. The one we ended out on the strong note. About to actually get into it. And I'm gonna go through the actual trading psychology and the mindset of what was going into the trade as to why the trade played out. I'm going to explain it, okay? And then we're going to look for some setups on Bitcoin. We're going to mark up Bitcoin and see if we can take a trade on Bitcoin. All right. So that's what we're going to do. Let's go ahead and stop sharing, and then let's go ahead and share again. And let's go back to gold. All right. So here we go. Here's the deal. A change of character does not determine a change of trend. I'm going to say this again. While a lot of people lose and take lessons on their trades, a change of character does not determine a change of trend. So what I'm going to do is draw it over here, what a change of character is. So right here is an uptrend, right? Low, high, higher low, higher high, right? This right here is an uptrend. What I'm going to do is I'm going to simply change the color so it don't really clash. All right. This right here is an uptrend, right? You have a low, high, higher low, higher high, right? Now, here's the deal. When it comes to the Richard DeMille Wyckoff method, which I have 3 books by an author that wrote 3 books on trading and investing, which is right here. So if you want to get into the meat and potatoes in it, you like a reader, you want to know the details behind the market moves, okay. If you read the book and don't understand it, feel free to reach out to me. I don't mind going and breaking down this information for you. I'll advise you if you're not a part of my Telegram chats, they're free. I have several individuals, and I record every single time I go on Zoom, and people will vouch for me and tell you that they learn a lot on these calls, and when they go back to these Zooms and play, stop, pause recording, and listen to the feedback that I have given on a particular session. All right. So book number 1, Trading and Investing for Beginners by Ruben Villahermosa Chavez is part 1 of the trading book. Okay. This is what you call beginner, right? And you should read this and be able to understand things coming out of here as a trader. Okay. Book number 2. All right. Is this one, the Wyckoff methodology in depth, right? How to trade financial markets logically. On the back it says trading and investing with common sense. Okay. So in this particular book, but first let me go back to the first one. In the first book, you're gonna learn You're going to learn financial literacy basics and understanding how the stock markets work. Now, the thing about it is, this is not only pertain to stocks, indices, forex majors, forex minors, metals, crypto, um, futures. All of them move to get the same and print the same. They just all have a different outcome. They all have different amounts of money pumped into it, and they all have different time frames as far as how long they are, how long from opening to closing they are in the market. Like the stock market, it's just like a job, 8 a.m. to 5 p.m. If you're in the Eastern Standard Time Zone, 9 a.m. to 5 p.m. And it's off on the weekends. Okay, but forex Sunday at 4 p.m. Central Standard Time, all the way to Friday at 4 p.m. Central Standard Time. Even in Eastern Standard Time Zone, it's 5 p.m. to 5 p.m. In Pacific Standard Time Zone, it's 2 p.m. to 2 p.m. Okay, and so that's the deal. So in this particular book, what you'll learn: financial literacy basics and understanding how the stock market moves. 3 high-level technical analysis methods: price action, volume spread analysis, and Wyckoff. How to correctly identify the market context, range, or trend. 4 winning trading strategies to apply depending on the context. Implementing robust money management methods, advanced techniques to manage trades. Developing a statistical and objective mindset. Key. How to make your own trading plan step by step. Record of trades and periodic evaluation. Resources for obtaining trade ideas. Organization of assets through Watchlist. That's what you learned in part 1. Okay. Very detailed and good book about this author, Ruben Villahermosa Chavez. All right, cool. And risk management is key. You got to capital preserve in order to capital gain. Book number 2, the White Card Methodology in Depth: How to Trade Financial Market Logically. Same author, goes the medium, right? Goes a bit detailed, actual market price cycles that I'm about to go over right now. See, the market right here accumulates at a low. Accumulation. This is like, hey, you found some Jordans at Walmart on the clearance on retail, and I'm talking about the real deal Holyfields. You found the market. You found some J's on clearance. You're a shoe club, right? Cool. What you're gonna do is buy them for the low. They on discount right now. Okay, the market accumulates and then it expands and it goes up. It goes bullish. What's gonna happen next is the market gonna come to an area again and it's gonna reaccumulate. It's gonna have a bullish triangle. Okay, you're gonna create some type of reaccumulation, which means, hey, the value of the Jordans went up, but they still at an affordable discounted price. So what you're gonna do? You're gonna go to the store, reaccumulation store, and you're gonna do what? Continue to buy again. Okay. Now that the market has expanded out of the reaccumulation price cycle, it reaches a premium, which is a distribution. Now what you're gonna do is this: the value of the J's that you got at the accumulation and reaccumulation store, the value of them have went up, and now they're expensive. They're a premium. Everybody wants them. So what you're going to do is you're going to sell them for what? A price higher than you're going to sell them for a price higher than what you got them at the accumulation and the reaccumulation price cycle. Okay, you got them at a cheaper price down here. You got them at a cheaper price down here. Now the value of the J's are up here. Okay, cool. You're going to sell them and profit from the difference. So there's a distribution right here. Then the market is going to go down and create a what? Bearish triangle, which is called a redistribution price cycle, which means, hey, these J's still hot right now, even though the value of them went down. I'm still gonna sell them because it's at the redistribution store, and people still want them. So I'm still profit from the difference. Okay, cool, bet. The market comes out of the redistribution cycle, and then it goes back to what? The accumulation cycle. And the market price cycle starts all over again. Accumulation, reaccumulation, distribution, redistribution. Accumulation, reaccumulation, distribution, redistribution. Come on, say it with me. Accumulation, reaccumulation, distribution, redistribution. It doesn't matter if it's an uptrend, it doesn't matter if it's a downtrend, it doesn't matter if it's sideways range consolidation. This is how this market prints. It does not skip price cycles. Okay? Does not skip price cycles. Okay? Cool. We understand that before we continue? You understand that before we continue? All right. So this is book number 2. It goes over the market price cycles: accumulation, reaccumulation, distribution, redistribution, and all 5 phases, A, B, C, D, and E, and the events within inside of those phases. All right. That's book number 2. So book number 3, Ruben Villahermosa Chavez wrote, is a Wyckoff 2.0 structures volume profile order flow. So what he does is he actually takes the market price cycles, being the accumulation, reaccumulation, distribution, redistribution, and then what he does is he he places a set of training wheels, which is a indicator called the volume profile. Take the volume profile and put it over the actual market price cycle, so you'll be able to identify where the high volume is at. Okay, but that's not necessary. Okay, but it's still a great information that you can extract out of it. This is more of a advanced. This also has the trading and investing with common sense on the back of it. Okay, those are 3 books that I would highly recommend if you're going to take take skill set seriously. Now here's another book. This is a harmonic pattern book. This is what I first started learning how to do and trade. So it's basically the market always moves in an M or W pattern. Doesn't matter how big, doesn't matter how small. Okay, and some people get caught, caught in the trap, and they don't understand why their stop loss got hit or why liquidity got swept, anything like that. You understand how a market prints, you'll be able to avoid it. And we're about to go over that. So here's the deal. Right here, I'm always go over this. This won't be the first time, but it won't be the last. Okay? Where can the bulls appear in the market? That's a great question. Where can the bulls appear in the market? Okay? Number 1, the bulls can appear at a old accumulation. Okay, what I mean by old accumulation is this yellow circle right here. This is the old accumulation. Okay, that is also going to be known as a bullish divergence, which also causes a change of character. Change of character. All right. Number 2, the bulls can appear off of this bullish triangle, which is called a reaccumulation. Okay, so we're gonna have what? Reaccumulation, which is also known as a what? A bullish triangle. All right. And number 3, where else can the bulls appear? Okay, the bulls can appear when the market creates a lower low in a downtrend. Okay, these are the 3 areas where the bulls can show up at. Okay, now where can the bears appear? Where can the bears appear in the market? All right, great question. Where can the bears appear in the market? Complete opposite of the bulls. So it's going to be an old distribution. Okay, which is going to be a bearish divergence and followed by a change of character. I'm gonna have everybody trading. I'm telling you, break this stuff down to the point where it's so understandable. You're gonna have a redistribution, which is also known as what? A bearish triangle. And then 3, you're gonna have what? Market creates a higher high in a uptrend. Okay. Market creates a higher high in an uptrend. So here's the deal. I'm gonna leave this right here. So in this particular example, we have an uptrend, right? We have an uptrend. We have accumulation low, right? Reaccumulation, distribution, redistribution, accumulation. This right here will be what? A reaccumulation. And then the market did what? It caused a bullish break of structure. I got template saved, so we have a bullish break of structure. The market went up, caused it broke an old high and caused a what? New high. So guess what? Who has to come in the market? Now a bullish break of structure has happened. Who has to come in the market? Who has to come in the market after a bullish break of structure has happened? The bulls or the bears? After you have absolutely the sellers have to come in the market, because internally, what causes the market to create a bullish break of structure? What causes the market to create a bullish break of structure? What causes the market to create a bullish break of structure? Internally, something had to happen. There was a cause. And now we have an effect, which is a bullish break of structure. What was the cause? What was the cause of the market breaking an old high and creating a new high? What was the cause? The effect was a bullish break of structure. But what happened? What caused it? Internally, what caused it? What caused it to go bullish? What had to print? What had to print? A rig. So what comes first? What market price cycle comes first? I'm not disagreeing with you, but how does it print? How does it print in order? Okay, accumulation. There you go. Accumulation, then reaccumulation. I completely 100% agree. A accumulation and reaccumulation is the root cause and the reason why the market had an effect, which was a bullish break of structure. That is the cause. When you understand that, you know the sellers are about to come in. You can counter trend trade or you can pro trend trade with this. Okay? When you understand how a market prints, you'll be able to sit on your hands and be comfortable. You'll never miss a trade. You never miss a trade. First of all, also, you never be married to one biased, which means you don't come in like, oh, I'm looking for sales, oh, I'm looking for buys. See, when you say this, you miss out on the actual opportunity half the time. So what you were supposed to do when you come and approach the market and look at the trade on any pair, you need to have a buy scenario. You need to have a sell scenario, because the market is going to print one or the other. Okay, you have a buy scenario that says, oh, if it does this, I'm looking for buys. If it does this, I'm looking for sales. Okay, so here's the deal. You now have a bullish breaker structure, right? Now the sellers have to come in. Now here's the deal. What happens sometimes? Let's put it right here. A change of character does not determine a change of trend. A change of character does not determine a change of trend. Okay? A break of structure solidifies that the structure has that the trend has changed. A break of structure solidifies that the trend has changed, not a change of character. A change of character does not determine a change of trend. And I'm about to prove that to you because here's the deal. You can have this particular markup like this. And I'm going to show you, after I draw it up, I'm going to show you right here on this gold trade. So right here, the market can do what? It's at a high, so it has to distribute. This can distribute, redistribute, and come back down here to this old accumulation. Now, here's what I have. I'm drawing it out and I'm about to show you on the chart, okay? Here's what will happen. The market will do this. Let's see where it's, oh, here we go. It'll do this. The market will do this. Now, I'm gonna explain to you everything that just happened right here. Y'all just probably thinking, oh man, he just drew a bunch of lines. No, watch when I go over it, it's not gonna be foreign anymore. Okay, now then I'll show you on the candlesticks how it happened. Okay, this is a break of structure right here, right? So now you got an accumulation, reaccumulation that led to a bullish break of structure, created a high, right? Now here's the deal. This is a distribution. Guess what? This is a bearish divergence and change of character internally. The market went down, right? This reaccumulation was an area of interest where the bulls could have pushed the market back up, but they chose not to come in. Okay, this old accumulation right here was an area of interest where the bulls could have came in the market and had the opportunity to push the market back up. They chose not to come in. They chose to come in off of what? This old accumulation right here. Okay, which is fine and dandy. But here's the deal. What has happened? Since this old accumulation did not get respected and got disrespected, this is now called a what? A change of character. This is now called a change of character. But a change of character does not determine a change of trend. And then what you see a lot of times is when the market changes character, you have people wanting to do what? When the market creates a bearish change of character, in this particular example, people are ready to sell at the low. Now, why would you do this? Why would you do this when you know that it was a distribution and a redistribution that caused the market to have a bearish change of character? You asking for your stop loss to get hit. You asking for it. Does that make sense? I'm showing you on an illustration right now, but then I'm gonna show you on the candlesticks, and you're gonna be like, oh wow. Oh wow, really? Yeah, really. The market, what caused the market to do a bearish change of character? It was a distribution and redistribution that led to a bearish change of character. So why, when you have a bearish change of character, why would you go for a sale? Another thing is this. You had a divergence and change of character up here. This now becomes a supply zone. This now becomes a point of interest where the sellers can come in at. Okay? This now becomes a point of interest where the sellers can come in at. Now here's the deal. Once the market created that bearish divergence and change of character right here, the market did not, when the market created this bearish divergence, followed by what? A bearish change of character, the market did not do what? It decided to not do what? Reverse, to come back to mitigate the supply zone to create a possible lower high, and then do what? Distribute, redistribute, break the old low, and create a new low. Now we have done what? Created a bearish break of structure. Does that make sense? But in this particular illustration, the market distributed, redistributed, caused the bearish change of character, and the market decided to mitigate a demand zone as opposed to doing what? Reversing and coming back to the supply zone. So guess what? We have this open supply zone followed by what? A redistribution. That's going to create another open supply zone. We have two back-to-back open supply zones. What if this market is truly going bearish? Why would the bears create that? The bears wouldn't create that. If this market is truly going bearish after this change of character, the market would have came back up and did what? Accumulated, reaccumulated, came back to mitigate the supply zone, and then we would have a what? Smaller time frame distribution, redistribution, break this low, create a new low. Does that make sense? But in this particular example, what do we have? Open supply, open distribution, supply zone imbalance. The market decided to do what? Divergent change character in here. It didn't come back to the supply zone and cause change of character, caused a redistribution, and then it caused a higher time frame change of character. So then the market did what? Created this low, created this high, broke this low right here, which means, hey, what leads to a breaker structure below? This right here is indeed a broken structure. What leads to it? A distribution, redistribution, causes the market to break a low, old low, to create a new low. So now you're going to look for buys again because a distribution and redistribution has already been printed. You're not going to look for a sell after old low has been broken. You can't do that. That's not how you're supposed to trade. A distribution, redistribution, breaks the old low, leads to a new low. Okay, here come the buyers. Now here's the deal. This is a divergence, and now this is a what? A change of character, because this is the last lower high that led to what? The break of this old low and create a new low. Okay, so bam, look, change of character. Boom. So now the market changed character. A high was broken. You still not going to look for buys because you had a bullish change of character. What leads to a bullish change of character? Internally, the market had to do what? Accumulate, reaccumulate, cause a bullish change of character. You are not going to do a buy market execution once the price creates a bullish change of character. That is not how you're supposed to trade. Why would you why would you do a buy market execution and your stop loss is going to be at this low? That's too much of a risk. So what you're going to do is this. Let the market diverge and change character. See if the market is going to come back to the supply zone or the demand zone that caused a change of character. If it does, okay, cool. If the market would have came back to the supply zone after it caused this change of character, okay, cool. It would have accumulated, reaccumulated. Then we'll look for what? A lower time frame distribution. Okay, the market decided to do what? Diverge, change character, create a redistribution, have a bearish change of character on higher time frame, come into a demand zone. If it left this supply zone open and this supply zone open, that means this is a retracement and the market wasn't supposed to go bearish in the first place. This will be a correction. So it means overall the market is what? Bullish. So you have accumulation, reaccumulation, bullish change of character. The market created a high, distribution, redistribution, came back into what? Demand zone, right here. And now you have a what? The market did what? Accumulated, reaccumulated, caused a what? Internal breaker structure right here that ultimately did what? That ultimately led to what? A new overall structural high, which now this is a what? A breaker structure. Does that make sense? Let me know something before I continue. Does that make sense? So what I want to do now is actually go over gold. Okay. What happened right here and how we was able to, I called this out in the community. Okay. How we was able to capitalize off this trade. Okay, cool. Here we go. Market tapped in right here to a demand zone, right? This market went up. This is a redistribution. Right here, we're looking at it from M5 time frame, okay? This right here, with this candlestick right here, is a redistribution, is a bearish triangle. The market accumulated, reaccumulated, broke this high. So now the bears are not coming in off of this level. It distributed, redistributed, came back, and respected his demand zone. Did what? Excuse me. Accumulated, reaccumulated, broke this high internally, and went to ultimately what to do what? Break this high. So now we have a what? We have a bullish breaker structure right here, right? So now the bears need to come in. Okay. This is an area of interest where the buyers can show up at, because this is where the market did what? Accumulated, reaccumulated, broke this structure and led to that breaker structure. And you can see it's unmitigated, right? You can see it's unmitigated. So guess what? What you'll do is this. Okay, I'm gonna zone this off. This is the area of interest where the buyers will come in at. You're not putting a trade right here. You're not putting a pending order. You're saying, okay, cool. This is the area of interest. This is a demand zone. The market distributed, redistributed, broke this low, broke this area of interest. So now this became liquidity. This right here became liquidity. People had their stop losses rested below here. They had pending orders, stop loss orders right here. Boom, they got hit. So now you had an unmitigated demand zone right here. Now the market did what? It broke this low right here. So the bulls got to come in now. What led to it? Distribution, redistribution, led to the break of this low, create a new low. Boom. Accumulation, reaccumulation. Okay, here's the deal. Right in between here, on a 1 minute time frame, you had a distribution, redistribution, market tapped into a demand zone, accumulated, reaccumulated, broke this structure, and it ultimately led to what? A breaker structure of this high, right? So then the sellers got to come in. Sellers right here, look at this. Distribution. I'm going to show you on an M1 time frame. I'm going to show you on the M1 time frame. This right here, look at this on the yellow right here. This right here is a divergence, and this right here is the change of character. Why is this area the change of character? Because this is the last demand zone that mitigated this demand zone, and it did what? Accumulated, reaccumulated, broke this old high, created this new high. Does that make sense? So after this breaker structure happened, the sellers got to come in, right? Distribute, redistribute. Man, we don't care about your demand zone. Boom, change character. What did it do? It left this imbalance open. It left that supply zone that caused the change of character open. Look at it. Slanting upward, slanting lower. Divergence. This midpoint right here, change of character area. So guess what? What happened? This was a unmitigated supply zone. Now that the market changed character, we need to see if me and Aki missed out on this trade because we were looking for sales. Okay, but that's neither here nor there because we didn't take a lesson. We didn't even take a trade. So you have this unmitigated supply zone. Now it led to a change of character. We need to see one or two things. Is the market going to come back, accumulate, reaccumulate, mitigate this supply zone, create a lower high, to then do what? Go down, distribute, redistribute, break the old low, create a new low? Or is it going to leave it unmitigated and worry about doing what? Coming to the demand zone. And that's what it did. After the change of character, it left this unmitigated and went and didn't give a damn about it, didn't care to mitigate because the market was not going bearish in the first place. This was going to be a correction. Supposed to be a correction. So guess what you have right here? You have the market doing what? Sweeping this low right here. Boom. Liquidity taken. Right? Same thing as a breaker structure. Same thing as a breaker structure on the second time frame, okay? Boom. A low was taken. Here's your what? Accumulation, reaccumulation. Smack this supply zone. did what? The market did what? The market did what? Distribute, redistribute, boom, broke an old low and led to a what? A new low. So guess what? What do you have now? Now that the market has broken an old low and led to a new low, you now are looking for what? Buys. Does that make sense? The market has distributed, redistributed, broke this old low, led to a new low, into a demand zone. Boop, buys. Is this all making sense? This is all making sense. Oh, you was away when I was asking questions? Yeah. So anybody have any questions, problems, or concerns before I continue? Everybody understand how this buy entry was it, how this sell wasn't. Let the market diverge and change character. It's going to give you the clue. It's going to give you the clue. You do not, they want you to take it for a sell after it changes, have a bearish change of character. They want you to take it for a buy after it has a bullish change of character because it is absolutely blasphemous, asinine, and ridiculous to be able to take a sell when the market creates a bearish change of character, knowing that it was a distribution and redistribution that led to a bearish change of character in the first place. Or it will be absolutely blasphemous and asinine and ridiculous to take it for a buy after the market creates a bullish change of character, knowing that accumulation and reaccumulation caused that. It'll be absolutely asinine. If the market changes character, okay, cool, sit back and chill. If it decides that it wants to come back to the supply zone or the demand zone that causes a change of character, cool. Give me a lower time frame distribution if it's in a supply zone. Give me a lower time frame accumulation if it's in a demand zone. But this divergence to change of character, it left it unmitigated on purpose because the market was not supposed to go bearish in the first place. Boom, it came back and did what? Mitigated demand zone, bullish engulfing candlestick. Boom, there go your buy. There's your buy entry. There's your buy entry. So here's your accumulation, reaccumulation, and then bam, there's your bullish breaker structure. Okay? Y'all give me one moment. All right. So that's the spiel with that. Does that make sense? That buy makes sense? Now that the market we got the bullish engulfing candlestick off of demand zone, right? Accumulation, reaccumulation, boom. Price break structure, right? Creates a new high. Now guess what? All of this M1 time frame is absolutely readable, but you can stick to the M5. But the thing about it is this: don't mark up structure. I don't want you to stress yourself out marking up structure on the M1. If you number one, if you're not comfortable with it, you don't understand it. Number one, you're not comfortable. Number two, if you don't understand it, you can mark up structure on the M5 and then go to the M1 to take the execution. That's what I did on this particular gold trade right here. Okay, so right here, the market created a low. Here's a high. Market came back. Boom. This right here, break a structure. Market broke structure. Sellers come in, came back, mitigated this demand zone. Accumulation, reaccumulation. Break this structure. Sellers got to come in. Distribution, redistribution, come off the reaccumulation. Oh, accumulation, reaccumulation. Oh, smack the redistribution, supply zone, and let's sell. Does that make sense? Let's sell. Boom. Market sold back down. Bam. Took this. This was unmitigated. Bam. It became liquidity. Does it make sense why the set? Because here's the deal. This accumulation, when the market came, when the market respected this reaccumulation right here, it was supposed to do what? This when you have a low in the market, a higher low, it's supposed to do its job and its purpose and do what? Accumulate, reaccumulate, break the old high, create a new high. In this instant, it didn't. So the bears smacked it. It smacked this area. The bears rejected it with that long wick. There's your sell. There's your sell. So all the way down here into what? That demand zone. Does that sell make sense? Understand why that sale happened? Told you this market is absolutely readable. Absolutely 100% readable. Now here's the deal. If I go on the M5 time frame, look at this. Check this out. Erasing all of this, right? I'm gonna erase all of this right here. Right? I'm gonna erase all of this, and this picture's gonna look absolutely clear. I just did it on a 1 minute time frame to show you how fractal the market is. All right. I'm about to blow your mind with this one. Same stuff. I'm just on a higher time frame. Watch. Now check this out. Without looking at the RSI, this right here is a divergence. Why? Why is that divergence appearing? Why is that divergence appearing? Because the market broke structure right here. Didn't the market balance out? Didn't the market last balance out somewhere right here? The market created that low right here, took this low, right? Liquidity, and the market last balanced out right here. And it was this low that did what? Accumulated, reaccumulated, broke this old high and led to a new high. So guess what? If the market already did what? Accumulated, reaccumulated, broke this structure, the bulls have to come in, right? I mean, the bears got to come in, right? This is a divergence. This right here is the change of character, right? This right here is the change of character. Now, the market has changed character on the M5 time frame, which means there's an unmitigated supply zone, right? There's an unmitigated supply zone. Okay. Now, after the change of we know what caused the bearish change of character. Internally, it was a distribution, redistribution that causes a what? Bearish change of character below. But after this change of character happened, did the market go back up and smack the supply zone? Answer that. After that bearish change of character happened, did the market go back up and smack the supply zone? First of all, let me show y'all that it's a divergence. Look at this. It's slanting upward. This is slanting lower, right? So then at midpoint, boom, change of character. This is the last area where the market accumulated. Okay, that's why it's the change of character area. Okay, cool. So, question: after the change of character happened, after the bearish change of character, which means the market passed that orange line, did the market go back up and smack the supply zone that caused the change of character? Yes or no? Did the market go back after the change of character happened? Did the market go back up and smack the supply zone that caused the change of character? I'm about to give y'all a clue in y'all trading. I just said it earlier. The market created a bearish change of character. And so the market did not come back to mitigate the supply zone that caused a change of character. So it's left unmitigated. It's left uh, imbalanced. It's not touched. So what happened was this. The market created a redistribution and broke lower. So now I know that the bulls got to come in. Why? We see it on a 1 minute time frame. The market created a change of character. You got a supply zone that's unmitigated up here. So it created a redistribution, right? So now we got what? Unmitigated distribution, supply zone. We got a redistribution that's now unmitigated. So now we're going back into a what? Demand zone. That's a clue. The sellers did not come back and worry about mitigating any supply zones leading into this demand zone. So guess what? Boom. Let's go to M1. We have what? The market speculative supply zone, distributing, redistributing. Boom. Breaking this low right here. This is how you read it on the finite. Boom. Market broke this low. So that means what? The bulls got to come in. At some point in time. Boom. Broke this low. So here's the deal. The market went up. Smack this supply zone right here. This supply zone, the rejection of this supply zone is supposed to be a lower high. The purpose of a lower high is supposed to do what? Break the old low and create a new low. So boom, it rejected it. It didn't have enough power to do what? Break this old low and create a new low. So the market came off of a redistribution, smacked and respected a demand zone on a lower time frame, and then did what? Accumulated, reaccumulated, caused a bullish breaker structure right here. And now the M1 is bullish. The M1 is now bullish. Now here's the deal. M5 is bullish, but right here, from here to here, M1 was bearish. So now the M1, the lower time frame, married up with what the higher time frame needed to print. Right here, M1 was bearish, okay, but M1 was bullish. Right here in this area, M1 was bearish, but the M5 is bullish. You got the market creating what? Higher highs and higher lows on the M5 time frame, right? You got what? A high right here. You got a low. Broke an old high, created a new high, and you got a low. So guess what? The market was bullish on the M5, but it was bearish on the M1 until the market came right here. It wanted to go back bullish along with the M5 and create a new high. So this was the actual execution of the trade. You can see it. Market broke an old low. Okay, cool. The bulls got to come in now. Okay, cool. Bulls come in. Bam. Respect to the redistribution supply zone. It didn't go down and create a new low. Respect to the demand zone. Accumulation, reaccumulation. Break structure. Create a new high. Boom. It was gone. So now guess what? Where was TP1? TP1 was at the what? Redistribution right here. So right in here was TP1. Okay? Because this is an opportunity for the sellers to be able to push this market down. Okay, so we got to respect that. Okay, cool. The market broke up below that TP1 hit. Now TP2 is what? Distribution high. You see, that's why the TP is sitting right there overall, distribution high. So guess what? This is the first opportunity for the seller to come in. Okay, redistribution didn't work. Cool, we continue to go bullish. The distribution zone is the second opportunity for the bears to come in. Okay, cool, that didn't work. Boom, the market went back up, broke this structure right here, went bullish again. So guess what? Now that the market broke this old high, created a new high, the bears have to come in. The bears have to come in now. This is like strike three. This is like being at the plate and saying it's a full count, 3 balls and 2 strikes. You ain't got no choice but to swing. You got no choice but to swing. That makes sense? Does everybody understand this explanation before I go look at Bitcoin? Everybody understand that gold explanation before I go look at Bitcoin? All right, cool. So here's the deal. What am I going to be looking for on gold next week? On the M5? Okay, what I see is this. The market mitigated this level, okay? Okay, I see the market mitigated that. So I'm going to just map it out. You map your way to the millions. So now I know the market created what? A low. Truly, this is a high. This is a low. So the market did this. Truly, how I'm supposed to mark it out is this low broke this structure and led to this high. Okay, that's how I'm really supposed to mark it out. So low broke an old structure right here. So now this is a bullish breaker structure, right? So that means the sellers have to come in. All right. So now this low broke this old high and led to what? This distribution high right here. Now, guess what? You know this area just got mitigated right here, and this is an imbalance that led to what? It led to an internal breaker structure right here. Okay, so you can see clearly how this M5 demand zone is imbalanced. Okay, so it's an area of interest where the who can come in, the bulls can come in. So we have to mark it out. We just can't ignore it. So now, what am I looking for? Okay, what I see is that the market did not respect this POI right here. So it sold off, it diverged, it changed character right here, right? Did not come back and hit the supply zone and cause a change of character. So what I'll do is this. This is a supply zone, and I'll zone it off. I'll zone this off. Okay, cool. This is a supply zone. Okay. You can see it better on the M1, how the market did what? Diverge and change character. Okay. So now look, watch this. Here's the trick. Here's the trick. Remember, set yourself up for the buy scenario and a sell scenario, okay? So now the market does this. Creates this low, pushes past this supply zone. So now internally, what do you have? You got a low. I'm going to draw it like this with the path. You got a low. You got a high. You got the market creating a low. You got the market doing what? Breaking the structure, creating a high. Then guess what? You got the market doing what? Creating a low right here, right? And then what you're thinking is this. The market's going to do what? Break structure, create a new high. So guess what? If the market indeed does this right here, what would this become? A breaker structure, right? That would become a breaker structure, right? Internally. This has internally broken substructure, right? Okay. What would you be looking for if this were to happen? If this were to happen, okay, what would you be looking for? Buys or sells? If this were to happen, if the market opened up and this were to happen, what would you be looking for? Buys or sells? Absolutely. It's two crucial reasons why. Two crucial reasons why. If the market decided to do a bullish breaker structure internally, what led to that? Accumulation, reaccumulation, breaks this high, leads to a new high. So guess what? The bears have to come in, which means this is buy side liquidity being taken into a what? Bearish divergence and change of character POI that's unmitigated, that's clearly unmitigated, that I can see, right? And so I'll wait for my lower time frame confirmation distribution for the sales to come in. If it doesn't want to do it, what it'll do? Run those highs and do what? Create a new high. I just saved myself. Make sense? So guess what? We have to be super cognizant that, okay, cool. We have a demand zone down here that's unmitigated. We got a supply zone that's right here unmitigated. Now, remember, price has diverged and changed character. This may be one that wants to go back to mitigate the supply zone that caused the change of character, right? Because this right here is a change of character, okay? So maybe because it didn't do it on this one, right? Maybe this divergence, change of character, hey, come back and do what? Refill the supplies on the cause of change of character, and then do what? Hey, we're going to look for confirmation-based sales. Nice tight stop loss. However it wants to penetrate, however deep it wants to penetrate, whatever the case may be. Okay, boom. And we're going to go to this demand zone because we see it as unmitigated. We don't know if the buyers are going to come in off of that, but guess what? That's going to be TP1. Now, here's the deal. This whole entire thing can be what? This whole entire thing can definitely be a distribution schematic cookie. It absolutely can. You want to know why? I'm going to show you. What just got broken right here? You have a low, you have a high, you have a higher low, you got a breaker structure right here, right? Market create a high, create a low, market went up, did what? Create this high, came off a demand zone, did not break structure, sellers came in a little bit, and then what you have right here is like bullish divergence, change of character, this being unmitigated, so you got accumulation, reaccumulation, bullish change of character, market came to the supply zone, create a reaccumulation, broke this old high. So guess what? Now you got what? Accumulation, reaccumulation. It led to what? A break of this old high. And guess what? This could be a whole entire distribution cookie. But that doesn't stop us from doing what? Taking it for buys and sales while it's cooking. That doesn't stop us from doing that. All right? Nothing stops us from doing that. All right, so let's go check on Bitcoin. That's gold in nutshell. I don't know if gold is going to do that, but I'm just saying if it does, that'll be key. It took buy side liquidity into a supply zone POI, and then you just wait for what? Go to M1, wait for lower time frame confirmations. That's all you can do. All right? Cool, bet. That's gold. Let's go look at Bitcoin and see if we can probably catch a trade. I'll look at the Coinbase version. All right, let's start with the higher time frame first. Cool, bet. Erase everything off here. Cool. This is what happened. We have a breaker structure right here, right? You see how the market diverged and it changed. I'm telling y'all, this stuff happens. It happens every single time, right? Imagine if you were to caught this big gigantic the divergence of change. Here's the deal. I can see it without even looking at the RSI. Price diverged right here. I'll show you on the RSI after I mark it up. Price diverged right here. Here's the change of character right here. That low, right? Now here's the deal. When the change of character happened, did the market go back to the supply zone that caused the change of character? Or we have a distribution imbalance and a redistribution imbalance? Does this all make sense? Does this all make sense? It happens every single time. You got some people right here that I'm like literally market change character. They sold after it changed the character, but it truly wasn't going bearish. That's just a correction. You see the distribution. You see the bearish triangle right in between here. You see the redistribution, imbalance, supply zone right here, unmitigated, clearly. Boom. It's a trap. It's a trap. Unmitigated supply. If the market decided to change character, if it truly wanted to go bearish, the market would have pulled up like this. The market would have came back, After it changed character, it came back to here, accumulated, reaccumulated, and then distributed, went redistributed, broke this old low, and then made a new low. That's what it would have happened. That's what would have happened if the market truly wanted to go bearish, but it didn't. You clearly see that. So look at this. Look at this. Look, slant upward, slant lower. Last accumulation, high, bam, change the character. All right, same stuff, same stuff. So here's the deal. Now that this has happened, it has broken that high, right? Now this is a what? It's a bullish breaker structure. So guess who got to come in the market now on the monthly? Who has to come in the market now on the monthly on Bitcoin? Who has to come in the market now on the monthly on Bitcoin? Sales, absolutely, 100%, 100%. Who has to come in the market on the monthly now on Bitcoin? The bears got to come in because what happened? What caused the market to do this? There's your divergence. You can even see it. Look at the divergence. Divergence. Change of character. The market changed character. You can see it. Look at it. You can see it. Divergence. Change of character. Here's your what? Reaccumulation. Boom. So now what? This right here is the area of interest. It's just is a big gigantic fair value gap in between here. Area of interest. Okay, let's go down to the weekly. So now what we need to understand is we want to take trades in between here while it's cooking. We don't even want to wait for the whole distribution to have I ain't trading Bitcoin because it's gonna take a long time. No, you actually traded for buying and sales while it's still cooking. Okay, so what we see is this: the market came low, came into a supply zone, did what? Distributed, redistributed, broke this low, created a new low. Accumulated, reaccumulated, smacked the supply zone, distributed, redistributed, broke this low, created a new low. Accumulated, reaccumulated, smacked this area. What did it do? Distributed, redistributed. Oh, respected the demand zone. So guess what? Let's go down to the daily. Y'all can see it. Look at it. I'm gonna put it on the weekly. As far as the market structure and dots, I'm gonna put it on the weekly. So we got this high. We got this low. We got the lower high. Market broke structure created low. We got the lower high right here. Market broke structure created low. Now the market created what? Lower high. You got this low right here. That's respected. So now let's go to the daily. Look at it. Look at it. Look how beautiful this is. This is so pretty. So pretty. So when you mark it up on a higher time frame, it always it makes the highlighted dots move when you go to a lower time frame. All right, cool, bet. What we see right here, you got the redistribution, right? Distribution, unmitigated imbalance, distribution, redistribution that led to what? Demand zone right here. We're gonna say it's on the daily. We're gonna say it's on the daily. And then boom. We're gonna say it's on the daily. Boom. All right. So you have this distribution right here being unmitigated, right? Distribution is unmitigated. You have the distribution, redistribution, smack into the demand zone right here. and then accumulated right here. The sellers didn't come in right here, accumulated, reaccumulated. So now right here is an area of interest where the sellers can do what? The sellers can come in the market and push this thing down. The sellers can come in the market and push this thing down. All right. So we know that the market did what? Accumulated, reaccumulated. Because you got this being a breaker structure right here. Because you can see how this low, this low right here, respecting the demand zone, accumulated, reaccumulated, broke the structure right here. So now we at a high. Let's go to the H4. All right, let's go to the H4. All right. So you got price, breaking structure right here. All right, so you got a low, you got a high on the H4. You got this being a low. You got this what? Accumulating, reaccumulating, breaking structure, creating this high, creating this low, breaking structure again. All right. So now let's go to the H1. Let's go to the H1, see what it's talking about. All right. So now you got the market creating a divergence right here. And this is a change of character. Without even looking at it, I can see it. So the market changed character right here. But now I change the character below. Okay, this is your divergence. This is slanting upward right here, like this, on the candlesticks. And then on the RSI, it's slanting downward. Look at it. See? I told you I could spot it without even looking at it. It just takes practice. It just takes practice. Okay. So now that I know, okay, that's a change of character, I need to see if the market wants to do what? Come back to the supply zone and cause a change of character and respect it. All right. Or I need to do what? The market has changed character, right? So it may want to go back and hit that supply zone. So let's see what's going on in between here. Okay, M30. Let's see what's going on in between here. So you got the market breaking structure right here and respecting demand zone right here. This demand zone went up to go break structure right here. Okay, and then I have this unmitigated right here, and price went up from here. All right, we need to see what's going to happen. That's a divergence and change of character probably on lower time frame. So let's see what's up. So now price is mitigating a what? A redistribution. Price is mitigating a redistribution. Let's see what's happening on M5. So we have a low, we have a high, higher low. Price did what? Internal breaker structure right here. Right, we have an internal breaker structure right here. So we got price mitigating a redistribution. So see how price is You see our prices are possibly wanting to sell off of that redistribution, but you got to be careful. You got to be careful. Yes, ma'am. Come on, what? So, like I said, you don't have to take this right. Just like mentally, um, mentally understand like what's going on with the market right here, as is on Bitcoin. Um, it's at a redistribution. So you would do what? Okay, the market created a low. You see the divergence and change of character right here. Price came back low right here, took this low, created a bullish breaker structure. So you could be doing what? Price could definitely come off of this POI, but you're on the M1, right? So it's super finite. Okay, so you can see that it's coming off of this redistribution, but we don't know if this is a sell to lead to what? The market to come lower and take out this low. We don't know that. It depends on your preference. It is strictly your preference. Uh, I'm more engaged on. I see that the market created a low, high, high, low, broke structure, high, got a low, and possibly want to do what? Create another breaker structure, create a high, possibly leading to that supply zone, then selling off of it to sell back down and refill these imbalances. So you have to be extremely careful. You have to be extremely careful. Yeah, you got to map it out like this. Okay, say you do it by time frames. Okay, the M30 is what? The M30 bullish. Low, high, higher low, higher high. So my thing is I believe it's going bearish. I believe it's going bearish. Let's see. But here's the deal. What I would do if you're gonna look for sales on Bitcoin from this particular supply zone or here this redistribution, what I would do, in my opinion, is wait for price to diverge and change character. So I would anticipate that price is probably gonna break up above this high and reach for some more liquidity, and I would anticipate a M1 divergence and change of character. Wait for the change of character to happen. See if after the bearish change of character, if price is going to come back to mitigate the supply zone that causes change of character, or is it going to go ignore the supply zone and come back to a demand zone? That way you'll know if to take a buy or sell. That way you'll know for sure. Let the price print the divergence and change of character. Let it print. Let it print. It's gonna give itself away. Just be patient. It's gonna give itself away. Absolutely will. So M30, mark this up gray. We got this low. We got technically that was the high. Low. That's the high. That's the low. That's the divergence and change of character. You can see it. Market broke this low, took that liquidity, bam, low, divergence, change of character. That's the low. Uh, let's see. But how I'm gonna map it up is I'm gonna say this is the low that led to this is the true high right here, and then this is the true low. Now we need to see what this low wants to do. This low, this higher low's job, is supposed to do what? Accumulate, reaccumulate, break, cause a bullish break destruction, lead to a new high. That's what it's supposed to do. But if it doesn't do it, then we know that the bears are coming in, and we can sell back to what? An imbalance. And it's going to be a nice major drop if that's the case. And map your way to the millions. Map your way to the millions. We don't know, so because this is a to change the character right here. You can't really see it, but as you can see how the market left this open and balanced on the daily, distributed, redistributed, low. Now, is this low going to lead to a break of structure right here and create a new high? We don't know. We just have to wait and see. We just have to wait and see. And if it does lead to a new high, what is this? Okay, that'll be a break of structure internally, substructure. But then you got this supply zone right here waiting to see if it's going to sell from here. So it's possible. Just wait for the presence. The bulls or the bears to show up. That's it. All right. Any questions, problems, or concerns before I log out? I know this thing about to be. What's up, Teo? Appreciate it, man. I'm gonna tell you all this, and I'm signing off. You are welcome to place any people that's going to display positivity uh, in my free Telegram chats. Anybody that needs help with trading, like any level, beginner, intermediate, advanced, the Telegram links are going to be in the description below this video. I appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It's always greatly appreciated. Now, I will never ever take it for granted. Have a safe, pleasant, productive rest of your Super Saturday. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose. So what purpose are you willing to fulfill? Also, don't be one of many. Be the one. Don't be one of many. Be the one. Be the one that actually takes this skill set seriously and read these books to understand how this market moves. Be the one that actually takes a journal and journals their trades and become a professional trader and actually takes skill set seriously. Be the one that actually um, becomes patient and disciplined with the skill set so you'll be able to develop and grow. Because that's the point of doing it. You want to develop and grow. You want to have a track record. Like it's just like working out. You don't work out to not see results. You want to work out to see results. So then what you do is you document and you track your macros. You track your calories. If you want to be in a caloric surplus, you're gonna make sure that you're bulking. If you want to be in a caloric deficit, you're gonna make sure that you're shredding. Okay, things of that nature. You're gonna document it and give yourself a pat on the back for being disciplined because you want to see the results. You got to write things down and make it plain so that you can run towards it. That's scripture. Habakkuk chapter 2, verse 2. So once you see it and it's in plain sight, you get more and more excited about it. You get more and more excited about the next 24 hours. So let the market diverge and change character and see if it's going to come back to that supply and demand zone that caused a change of character. If it doesn't, it's a correction you're looking at, and then you'll be looking for the opposite trade. If the market creates a bearish divergence and changes character, and it doesn't come back and smack the supply zone, it's going to create a redistribution and go into a demand zone. Then you'll be looking for buys. Vice versa, if the market creates a bullish divergence and change of character, and it doesn't come back to the demand zone that causes the change of character, it's going to create a reaccumulation, go into a supply zone, and then you're going to be looking for a sale. It's just that simple, man. But you all want to trade with me? Just add yourself, download Telegram on your Google Play Store, your App Store, and simply add yourself to the Telegram chat channel because tomorrow I'm going to throw out the weekly schedule and I do live Zoom recorded calls. You'll be able to come on here and ask the questions. If you're unable to catch me live, the recording will be placed in the chat for you to go to pause, fast forward, rewind, and look at the notes. Be able to jot down the notes. I just want to see you become a successful trader. That's all. I want to see you become a successful trader. All right. Also, this is the broker that I use, Sway. That link will be placed in the chat as well. And if you're interested in doing prop firm challenges, Sway Funded has prop firms where you can start off at an 80-20 profit split, and for $30 extra, you can bump yourself up to a 90-10 profit split. All right. All of those links will be placed in the description below. Right? Y'all gonna rock out. We're gonna have a nice, successful, profitable trading week ahead with discipline, determination, and patience. All right. I would love for you to place those profits, those future profits, in the chat. As always, I'm signing off, and I'll see y'all on the next live. Now, YouTube live is gonna be next week, but the Zoom and all that stuff that's gonna be Monday morning, 4:30 a.m. Central Standard Time, 5:30 a.m. Eastern Standard Time, 2:30 a.m. Pacific Standard Time. That'll be, I believe, 10:30 a.m. Nigerian time, and it'll be, I want to say 5:30. I want to say 5:30 a.m. Mexico time, or maybe 7:30 a.m. Mexico time. But that's, forgot me got my times mixed up. But as always, may God bless. Y'all take care. Appreciate y'all for rocking out with me.